First question is, have you discovered your true purpose for money? That which is more important than money itself. Question number 2, are you invested in the market? That was fairly simple. Either you are or you aren't, okay? Question number 3, do you know how markets work? When you go into Walmart and you buy something, you're not paying the same price Walmart does. When you sell a stock, you're not paying the same price that the market maker paid. Okay? There's a bid and ask spread cost in these trades. Okay? It's like going into the casino. The casino does not care whether you win or lose. They just want you to trade.
Just play.
Just play. Just play. And what does the industry want you to do? Trade. You know what the average turnover is in the mutual funds according to Morningstar? Over 80%. There is money in active money management. The markets fail side. You defined your investment philosophy. Sound familiar? Do you believe markets work? Do you believe markets fail? Have you identified your personal risk tolerance? If your portfolio goes down 30%, are you going to panic and leave? Do you know whether or not your portfolio can go down 30%? A lot of times, especially in the beginning of, back in the 2000s, when portfolios dropped, and in 2008, when portfolios dropped, people, I was never aware of that portfolio could go down that much. Okay? Are you aware of what your personal risk tolerance is? How much do you know how to measure diversification in your portfolio? Diversification is not the number of funds that you've got in your portfolio. Diversification is what asset classes do you have in your portfolio. Do you consistently and predictably achieve market returns? Number 7. Do you know what the market returns are that you're capturing? What is the asset class? What's the return of a particular asset class? Question 8, have you measured the total amount of commissions and costs in your portfolio? Costs are in there. Whether you see them or not, you're paying them. Do you know what they are? Do you know where you fall on the Markowitz efficient frontier? Harry Markowitz won a Nobel Prize for the mathematics with portfolio construction. You can actually determine, using his mathematics, what the standard deviation is in your portfolio, how much risk is in it. Question 10, when it comes to building your investment portfolio, do you know exactly what you're doing and why? Do you know why a particular fund is in there? This brings up an interesting question. Have you ever had a broker call you up and say, we need to change this fund for this fund? Have they ever changed the funds in your portfolio? In other words, they take out Fidelity's fund number 1 or AIM Weingarten and they replace it with Templeton or something like that. Okay? Do you know when they did that, they admitted they made a mistake? Think about it. If the portfolio was built right, you don't have to change the funds. These funds that we're showing you here go back 20 years when they were put in these portfolios. Are you working with a financial coach versus a financial planner? I'm a financial coach. I'm on your side. I have to do what's best for the client. I'm not under a suitability standard. Okay? I have to do what's best for you, not what's suitable for you. And there's a big argument in the industry over this. The industry trying to water it down. A financial coach, we say we clean up what a financial planner has done. Okay? So. Do you have a customized lifelong game plan to guide all of your investing and spending decisions? Do you have a plan that gives you direction of what you're doing? That keeps you on track? Do you have an investment policy statement? Every one of our clients has an investment policy statement. It tells them we're not going into margin, we're not doing short sales, we're staying in this particular area of the market. How much of your portfolio is in equities and how much of it is in fixed income? Have you devised a clear-cut method for measuring the success or failure of your portfolio? If it goes down 20%, is that good or bad? Okay, depends on the range that portfolio could go. Do you fully understand the implications and applications of diversification in your portfolio? Do you have a system to measure portfolio volatility? Are you aware of the incentives brokerage firms and the financial community have in selling commission-based products? For a broker on commission, what do they have to do? They've got to get you to move your money. They've also, if you're working with a broker-dealer, the only thing you can sell is what the broker-dealer has arrangements with the various fund companies. So, do you know the 3 warning signs that you're gambling and speculating with your money versus prudently investing it? The first one's stock picking, second one is market timing, and the third one is looking at the past performance of a manager. We've already shown a manager that's picking some companies, you're betting on the manager. Question 19, can you identify the cultural messages and personal mindsets about money that destroy your peace of mind? Okay. Number 20, and this is the one that it's best if you answer yes to. Are you ready to shift your personal experience of money and investing from scarcity mode to an abundance mode? Okay? Now, what did you score